Good morning, everyone. It is Monday, March 8th, and this is Nadex Morning Analysis. It is a little bit of a quiet Monday for the markets to begin with. My name is Todd Rich. I'm with Nadex. With me is Brian Caprice from Keep Trading Simple, and we're going to talk about some hot spots in the market today, things for you to potentially look at. Before we go into it, I do need to share this quick disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk, and that this is an educational session. Please do not construe anything that Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. All right. With that, let's quickly just discuss, the news over the weekend that everyone's talking about. One, the attack on the Saudi Aramco oil facility. We saw a little pop in oil, but then, that dissipated pretty quickly.
I had it keyed up and now I can't find it, but yeah, there was a little bit of a gap from the weekend.
Yeah, we'll talk about that. And then let's quickly talk about the Senate did pass the 1.9 trillion COVID relief bill. So the question is are we looking at inflation? And we'll take a quick peek at gold, because interestingly enough, oil pops a little bit, came right back down. Gold is going nowhere, sitting at lows for the last couple of months. And then we'll talk more about that relief bill, and we'll look at the Dow, because I think there's a much more to the story there. But let's go ahead and start. And let's just take a quick peek at oil and gold. Although there's not much to really discuss, but that's maybe something to discuss.
Yeah, so there's a lot of expectations last Friday about getting the relief bill passed and just everything. And we had mentioned early in the morning that it was definitely a day that we could see like a feel good Friday situation, where although things were beaten up a little bit throughout the week, depending on what asset we were talking about, that everything would close in the green. And that's kind of what it did. So you can see here, we talked about this level at 66.14 to 66.57. Price came up and literally hit it, bounced back again, grabbed the lower level, hit it again, came back down, and then closed right in that level. So it's always interesting when you do see that, particularly when you're going into kind of a new week. Now, there obviously was some news. Yes, we talked last week on Friday, and we said that it was very strange that there were missiles being fired at oil refineries, but we really hadn't heard much. The oil market finally caught back up on that one. And again, our Sunday night gap was higher, came all the way up almost, literally right to the 68 mark, and then just came tumbling back down again. And now it's much lower and bouncing off that previous level that we had talked about before, that the last Harry Potter happened off of. So it's in a very interesting situation. And again, I think the passing of the bills over the weekend is definitely something to watch out for. So, I would say right now, I would make slight adjustments to the 66.14 from where they are right now. Actually, let me drop this down with 30, see if we can refine it just a bit better. Yeah, there we go. I would focus on kind of this is a potential area for any type of a pullback. And you can see we had a bit of basing here. Let me see if I can make the candles bigger so you guys can see. There we go. We had that bit of basing and this drop down and ran into this almost a level where we knew people were going to be. And then we had a quick push off. So I would use right now, I'd be focusing on this level over here at 66.25. With a potential risk up to 66.49, so about a 25-cent area. Now, we did adjust our curve slightly higher as well, because again, with this new bounce up, we need to make sure that we kind of capture that. So right now, we are still in the upper third. We're getting a little bit closer to that middle no man's land. Unlike last week, where we were able to just blow through some major levels that had been tested many, many times, I will say that this area here, the way that this looks, and again, people will draw this in different ways, but you can see that this was a pretty decent channel. And the way that this bounced off the channel where it came up and then back and then up and back and up and back and up and back, it created numerous levels here of buyers that they were stepping in, all the way from anywhere 63.84, really all the way up into the 65.50 area. So that's what we just went off of right now. I think the way to play this one today is going to be really see what type of other news unfolds, and then also how is the retail trader going to react to stimulus, the recovery bill. We'll cover the bill at the end, but depending on how they take that one, what the spin is, I think can kind of lead this in a couple of different directions. And now that I think a lot of the missile data is out, I think we could actually have a potential fall back. And again, if we base at this level, a fall back base probably back down into the 63.76 area, kind of this main area. But it's going to have to chunk through. It's not going to be kind of one consistent candle.
Yeah. This is one thing I just wanted to bring this up quickly. I didn't want to spend a lot of time on this, but it's an interesting story. The missiles are hitting facilities. Your knee-jerk reaction would be, oh my gosh, oil's going to spike, and it did a little bit. And there were, late last night there were some stories. Oh, oil popped through, popped up through $70 a barrel. One of my colleagues over at Daily FX actually pulled up a chart when the facilities were hit back in 2009, I believe, when Saudi Arabia was actually, it was 5% of the world's oil supply. And oddly, even then, the price of oil dropped following the attack. It didn't skyrocket. So, and now they're simply not, they're not supplying that much as a percentage of oil. So to see this kind of come back down, I think is kind of realistic. One way to play that would be, take a look at these binary options. These are the daily binary options, and there's probably ways. There's levels in here where you could go short, looking for an opportunity is if oil were to drift back lower. But again, I think it is important because there are some buyers stepping in periodically to pay attention to what else is going on out there, what other news might come out as people start digesting the COVID relief. On the COVID relief, let's just talk briefly about gold, because the one thing that we've always sort of mentioned is, hey, we put this much money out there, we might see inflation, and you would see that in gold, but we're not.
Yeah, actually, I'm going to jump back one again, just so everyone understands what the attack was. So there was originally missiles sent this weekend, and then there was a drone attack yesterday, or I guess earlier this morning, and it was on. Again, I don't know anything about Ras Tanura port, but it's one of the largest oil shipping ports in the world. It was a drone attack actually that came out this morning. The reason why it was big is because, again, it's the largest shipping port in that area, so it's the launching point to get to the rest of the world. There was no one injured, no property damage, and that's why you saw such a fast retracement on this. At the first,
there you go.
Again, there's not an unlimited supply of drones that terrorists are able to use. So as they start using the supply up, if they do no damage, the fear kind of gets evaporated out. But we can switch across to gold now, and so gold got really, I would say, ugly is probably the nicest word that I could say right now. This got really, really ugly. Like, we saw there was a big push through. We knew that this area was going to break last week. And again, we were waiting for news of the stimulus to come out. And you can see, here's Friday morning, right? That non-farm, and it literally spiked down, spiked up, and literally just chopped back and forth. It was kind of crazy. And again, consolidation, right? You had consolidation in here. You had, these lows that were doing the same thing, right? They were coming higher. And it was really kind of like, what happens next? We don't know, right? And then nothing happened. They didn't pass anything on Friday. It's amazing. They keep passing this stuff on Saturdays. I don't know why, right? But what happened is price came back up again. And this level, the 1706, the 1714, it's the level that we had talked about for a while that we're using for this. And we were really waiting for some type of a base and a punch lower. It ended up going through it much, much faster. But we had our little gap here, and it did go back above 1700 because that was a very, very big deal. It used to be 1800 was a big deal. Now it's like, holy crap, we're breaking through 1700? What is this? Yep. And what we did is literally price rally back up again. And you can see, we always talk about this. The candle where the spike really happens is where you would need to have profit targets, but there's also decent entry points there. I had this little this little purple icon so you can kind of see it. But that's what it did. It came up to the same exact area. Seller stepped in, punched it down, and then the buyers couldn't hold it up anymore, and it dropped lower. So at this point, we mentioned last week, we were looking at levels a little bit lower than this, right? We were talking about that any shorts that we took from this level, we were looking at 1681 as our potential profit target. And really, we were looking for bounces to occur here. Yes, Jinjin, she's like, Dad's talking loud. I'm going to do it too. She thinks I'm singing. So again, short profit targets we expected at 1680. 1675 was the next area where, when we look back, and I think it was on a daily, I could probably find it on the 4 hours, but yeah. You can see that the last time we messed with this area here, we had a very, very strong spike in, and it turned it completely around. So again, that first profit target is sitting down here, the 1681. 1676, this is a level where we're looking for a bounce, not kind of a one touch and in, not a spike like this. We're looking for kind of a touch and then a failure to go higher type situation. So it's close, it's there. Now, let me drop it back down to 30 minutes so you guys can see. But looking for something like this where it pushes into that zone, leaves it, and then comes back and then fails. There's a couple different ways to enter it. You can enter it on the comeback as it breaks the low, or in this case, the high. But I think that's something to watch out for today.
Yep. And instead of jumping over to the Nadex platform, I thought I would bring this up. This is Daily FX, and they've got the sentiment on what all the IG customers are looking at and what they're holding when it comes down to gold. And I always think this is rather interesting too when we see that 86% of clients are net long. People are all getting into this trade, and we have watched gold just get pummeled. The question is, how long can these folks hang on before they, before they get squeezed out of the trade? And
Todd, if you loved it at 1800, you love it even more at 1700.
1700.
It's perfect. It's amazing. God, right?
Yeah, it's hey, what a bargain. So right? It does get rather interesting when you put it in that kind of a context. What I'd also like to, it just taking a step back. Year
to date, gold's down 11%, almost 11%.
Yeah, it's getting hammered, and there's just no other. There's no really pretty light to put that in when you take a look at the chart of gold just down, 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 and everyone seeming to want to step in, and there are a lot of people who are long, and the question is when will they get forced out? All right, let's flip now, because I wanted to spend some more time talking about that Senate bill, the 1.9 trillion. It's the Senate passed it now, and then let's take a look at what's going on in the equity markets, the Dow in particular, because oddly enough, in 2 weeks now, we are all the way back to where we've begun, and it's really just gone sideways. I think this is actually kind of interesting. How and when are people going to start digesting this information and putting it into the markets?
Yeah, so just to put everything into light here, so there's been some major changes between what the House passed and what the Senate passed. The Senate changed it and has to send it back to the House. That vote is expected to happen tomorrow. But there's some major differences in this one. And again, a lot can happen this morning, particularly how the media is going to kind of sway this, whether it's good or bad. One of the biggest differences is lowering the threshold to receive money. Give me a second while I look up and grab it here again. So some of the biggest differences, the Senate originally passed it, and it was, individuals earning, basically the cap was lowered, right? The initial piece of 75 and below was to get that 100%. The amount is the same. It stated $1,400 payments for individuals. The difference now is it used to be capped at 75. What was it? I lost it. It used to be.
I think it was 100 and 200, wasn't it, or something like that?
Yeah, it's 100. It used to be 100,000 for individuals, 150 for single parents, and 200,000 for couples. Now the Senate's lowered that one, and what they did is now the threshold, instead of being 100, is only 80,000 for individuals. Instead of, what was it, 150, it's 120 for single parents, and instead of 200,000, it's 160 for couples.
Oh, 160.
Yeah, so quite a bit of a different drop lower. And again, this is messing, again, for lack of a word, it's messing with the middle class. A lot of these people were like, yeah, we're feeling the pain from this one. I know a lot of parents on my son's lacrosse team, they fall into this range where one parent had to kind of step back from working, but it puts they're right in the middle of this bracket, and this is money that they had expected that they were going to receive, and now they're not going to get it. So it's a positive on one hand that they finally have passed something. The House is expected to agree with them and get it signed, but on the flip side, there's a lot of people now that are not going to get it, that expected they were going to get it, and then now what? Right? There's not much to do. And then they also changed, there's no minimum wage increase hike. Again, that was something that a lot of people expected. Not that was going to happen fast, but that's actually good for business. Small businesses were very anti raising the minimum wage to $15. That takes a big cut out of their bottom line. And then the only other difference was the unemployment wage. Instead of it being $400, it's $300, but they extended it 1 week further, which is kind of like, hey, I'd much rather have $400 a week instead of $300 for 1 week longer. But that's what they did to be able to get it through. But the biggest differences are now, again, small businesses feel like they are safer because they don't have the minimum wage hike. So that is a positive for the market. Passing something is positive. It takes a lot of uncertainty out of the market. But now that there's a lot of extra people that are not getting it, the big question is this going to affect mortgage payments? Is this going to affect car payments? Are people going to have to dip into savings? So there's a lot in play because of this passing. So
Yep. Here I'm.
Yeah,
Yeah, go ahead.
Here's where current price is right now. You can see we had a pop in the overnight again. Feel Good Friday. Mentioned that it was coming in. It was a really good Feel Good Friday. Now we've kind of tapered back off again, and this was a big push down. You can see in the overnight, we opened high, immediately turned around and dropped back down again. As you guys know, for the open, I love to use these 15-minute charts. We can actually shrink this a little bit higher. I would say this is a level that I'd watch out for today. Whether or not we get there at the open or not, around 13,650. Again, ending in 5.0 is a good psychological number. You can see the last two attempts in the overnight didn't quite get there. It is a level we've talked about before when we were looking for a Harry Potter, but because it happened over a weekend, we always want to make sure we get a little bit of a reset. So we may have to adjust the Harry Potter higher. But at first glance, as it's rallying higher, this could definitely be an area where we're looking to whether take a 10 o'clock reversal, or again, if we rally enough in the next 30 minutes, the retail trader could be the I guess the food of the profit takers from the initial push overnight.
Yeah. And really what I wanted to show here, and it's no one can really tell. I mean, this is the last 2 weeks. We have gone, it really is. I think, Brian, the term you use, the racetrack, when you just kind of, but we've just gone sideways. I mean, we've had a little pop last week, or 2 weeks, a week ago. There was a couple of times where it sold off. We had this Feel Good Friday, but we really 2 weeks and we've gone sharply sideways. And it's how many times are we going to touch this level, whatever it is? Let's call it 31,630 ish. We're just shy of it now, but every time we've gotten here, I can't say every time we did push through and came right back down, but it seems to be a resistance level. We did get that rally Friday, which was nice. We did open higher, but immediately came back down through it. We're trying to push up here again. I don't know what to tell you, but we just know that this 31,625, 630 level, there is something here where sellers do step in. And I think a lot of people are simply trying to digest what the relief bill ultimately is going to mean for the economy, for families. Is money going to start flowing? And in the background, there's still the whole interest rate debate as bond traders continue to push bonds down on the back end of the curve, which is rates going a little bit higher, which might force the Fed's hand at some point. So just a lot of different things going on at play. Brian, anything else you want?
I was going to say, and Tesla's under $600 again.
Oh, look! I was going to say, is there anything else you wanted to chat about?
I was going to say, not that we can trade Tesla through Nadex, but I just know on my stock screen here when I look at it, it's like, wow, Tesla's under 600 again.
Well, you know what? Bring up the Nasdaq. It's kind of interesting because while the Dow's going sideways, we could just mention this quickly. Is the Nasdaq? That's where it's all been in growth. It's
this is the 1 hour. You can see. I mean, we kind of had that Feel Good Friday, and its retrace was much, much worse. I mean, this is here. I'll drop it down to 30 minutes, so it's similar. But you guys can see, what did we do? We closed high again. Feel Good Friday. Everybody's allowed to partake in that, right? It's 420 somewhere, right? Then it popped, and what did it do? Right into the 12,721, where we saw sellers step in, and they just hammer this thing down in the overnight. So I mean, this one definitely has a little area right here as well that I'd watch out for.
Yeah, so I mean the Dow a little different. I mean there's some value stocks in there, but the Nasdaq, it's got a lot of high flyers, a lot of stocks where, while they were the ones that really outperformed on the way up, they're the ones that might underperform on the way down, and we're starting to see that as people try to make a decision. All right, well that tees us up for today. Brian and I will be back again tomorrow morning.
Twice tomorrow.
Oh, we will be back twice tomorrow. We'll be back in the morning, and then there's the full-blown Tuesday weekly analysis where it's a deep dive into everything. I mean, just kind of go through everything. Meanwhile, any questions for Nadex? Customer service at nadex.com. We're here to help. Please email us. Brian is also available to you if you'd like to email him at support@keeptradingsimple.com. With that, we will be back tomorrow morning, and then again midday tomorrow for a full-blown 45-minute to an hour session, which we do every week. And I do appreciate the feedback that I'm seeing, and that's interesting. I will provide that feedback to our product team. I do appreciate that. With that, want to let everyone get ready for the open in 24 minutes. Good luck in the markets, everyone. Thanks.